Hello, welcome to your daily dose of cryptocurrency news. I'm the Northman. I hope that you're doing well and that you're taking care of yourself and treating yourself on a day like this. Let's get into today's article. Federal Reserve skinny master account proposal draws comments and clashes from crypto community banks. The main points. Comments were due Friday, drawing responses from crypto banks and community banks debating whether non-traditional financial firms should be allowed to connect and to parts of the US payments system. Anchorage Digital Bank said it supported the central bank's initiatives but said some issues need to be addressed. The Colorado Bankers Association, which represents more than 126 banks, and over 20,000 banking professionals, said it had concerns about safety measures. Nearly 30 comments letters were filed in response to the Federal Reserve's proposed skinny master account that would give certain eligible institutions limited access to the central bank's payment services. Comments were due Friday, drawing responses from crypto banks and community banks debating whether non-traditional financial firms should be allowed to connect to parts of the US banking system. A master's account allows institutions direct access to the Fed's payment systems and provides the most direct access to the US money supply available to financial institutions. Those without master accounts are often forced to rely on partners banks with master accounts to provide services. As the innovations have evolved, the Fed said it may be time to offer a tailored approach while trying to mitigate risks. The proposed slimmed-down master account would not allow for interest on balances and could not access the discount window to borrow funds, among other limits. Fed Governor Christopher Waller floated the idea in October, nicknaming it the Skinny Master Account, and said it would have some limitations around interest and overdraft privileges. On Thursday, Anchorage Digital Bank, the first federally chartered crypto bank, said it supported the central bank's initiatives but said some issues needs to be addressed. For example, one of the limitations is that payments accounts would be subject to an overnight balance limit. The central bank has a limit on the maximum amount of funds a financial institution can hold at the end of the business day, and it's considered settling a limit of $500 million, or 10% of the payment account's holders' total assets, according to the proposal. Removing or raising that cap is essential, Anchorage said in a comment letter. The proposed cap forces institutions to sweep client funds to correspondent banking overnight, reintroducing a very credit and operational risks that the payment account is intended to eliminate. According to the comment letter, such caps also negate the business continuity and disaster recovery value of the payment account. Master account comments and concerns. The Blockchain Payment Consortium, founded by the Solana Foundation and Sui Foundation, among others, called the proposal overdue in its letter and said access to central bank settlement systems is important in implementing a new law nicknamed the Genius Act, which I guess that you have heard a lot about the last year, which regulates stablecoins at the federal level. The Genius Act passage is proof that stablecoins and blockchains are welcome innovations to the US payment system, the group said. Quotes, now the Federal Reserve has the opportunity to support this innovation while upholding its mandate to safeguard the payment system. Community banks also weighed in. The Colorado Bankers Association, which represents more than 126 banks and over 22,000 banking professionals, as I said it had concerns about safety measures. Master accounts have traditionally been granted to insured and low-risk institutions. The association said in its letter, institutions that are insured have significant regulatory oversight and have limitations on what commercial activities are permissible. Limited Fed account access to low-risk institutions protect the payment system. The Community Bankers Association of Illinois, which represents 265 financial institutions in the state and has 160 associate members, said it supports innovation, but said novel financial institutions are, quote, not subject to the same robust regulatory compliance regime, and, quote, have not demonstrated fair, honest, and respectful treatment of their customers and communities for many decades, or in many cases for over a century. And quotes, if novel FIs are allowed Federal Reserve skinny accounts and services, they will not only have an unfair competitive advantage over community banks, but will additionally pose a significant risk of harming customers, the financial system, and American taxpayers, the association said in its letter. Well, that is up to you to decide. Of course, always do your own research. I will link the article, as I always do, down in the description below. Like and comment for more content like this. And I will see you in the next one.